market trends and forecasts, outlook for buyers and sellers, key insights from the experts. Welcome to the Hawaii Housing Report with economist Paul Brewbaker and Patrick O'Neill.
Hello and welcome to the Hawaii Housing Report. Today we've got the real estate trifecta. The condo market continues to be sluggish. Single-family homes starting to feel a little bit of pain, but based on Fed Chairman Powell's comments today, possible relief of a rate cut happening in September. To help us get it all sorted, we are joined by Hawaii economist and principal at TZ Economics, Mr. Paul Brewbaker. Paul, thanks for being here today.
Thanks, Patrick.
All right. So, Paul, let's start with Fed Chairman's comments. And now suddenly there's all this optimism in the air that maybe we'll see rate cuts in September. What do you think?
I think it's been anticipated, but we've come to the point where, as the Fed chair described today, the balance of risks is starting to shift from higher inflation, which led them not to lower the overnight rate, to higher unemployment, which would. And the tension, those are competing kinds. You can't reconcile the two. You kind of have to pick the one that's the bigger risk. And he signaled today that we're moving in the direction of more loss of employment than higher inflation risk, and opened the door to rate cuts being renewed this fall.
I see. Okay. So Paul Brewbaker's predictions for a rate cut in September, what do you think?
Well, just remember our predictions a year ago were exactly what I just said. And a year ago in September, at least, of last year, we're talking about the September 2025 meeting of the Fed in a few weeks. But a year ago, the Fed itself was expecting, this is their forecast, or it was expecting things to come down. Obviously, this heavy blue line, they put things on hold in the first 6 months of this year. And we're expecting even in June, as you can see from the other dotted line here, we're expecting that eventually they would renew. Well, we're here. So what they've signaled is, without saying it explicitly, they've signaled that the door is open again. They can remove the pause that has prevented them for 6 months to a year from continuing with what had been an ongoing sequence of decreases in the overnight rate.
Certainly for all of us in real estate, we'd love to see that rate drop. Now, there were news headlines today saying, based on this news, that the interest rates have already moved. Let's find out. We're going to bring in Anders Hostelli. He is the state manager for Rate Mortgage. Anders, are you there? There he is. How's it going, Anders?
Yeah, doing great.
All right. So Fed Chairman Powell's comments came out. All of a sudden, the news headlines are saying mortgage rates are softening. They're heading down. What's the real story? Where are they today? Did any movement take place?
You know, it's kind of interesting. Even if I just look at our little region out here in Hawaii, we didn't have a lot of locks. We had more earlier in the week. So as far as interest rates go, rates did get a little bit lower today, but not by much. And they're kind of in that range they were maybe about 3 weeks ago. About 3 weeks ago, rates started kind of ticking up a little bit. So it's good though. I mean, we like we like what we see today, but yeah, it's not drastic. Now, from the last time that we spoke, we were in the kind of the mid fives range for the vanilla loan. Today, we're in the low sixes, right? So yeah, so when you pull this up, you can kind of see right at the end there, and the little arrow, the little line's kind of going down a little bit. So that's correct. Yeah, so that's a good thing.
So this was yesterday from Freddie Mac, 30-year fixed at 6.58. Is that kind of what you're still seeing today?
Maybe it's 6.50 today, right?
I see. Okay, so not much movement there.
Correct.
Okay. And Anders, what about the adjustable rate mortgages? Where are they? Did they move in any different way?
Yeah, so they moved down a little bit more than the fixed rates. So what we did see today was the shorter end of the curve, the lower the shorter treasuries. They improved more than the 10-year, which is typically what 30-year mortgages are paid to. So you can get a like a 5-year arm in the high fives right now, with
Hmm.
1 point. So it's about half a point spread on the rate
Okay.
better.
Okay. That's good to hear. What about VA?
And VA rates, I was just looking at them. Boy, you can get a 0 point VA loan, 30-year loan, like 5.875. And
I see.
then also we did roll out, and we hadn't seen this in years, a 5-year arm. So it's a fix for the first 5 years and then an adjust every year thereafter for a VA loan. I haven't
Oh,
seen this in years because it would just never price out. 30-year fix was better than a 5-year arm. So why would you take a 5-year arm? But the 5-year arm today is 0 points for a VA loan, the eligible bar at 5.625, almost five and a half.
5.65. I see. Oh, interesting.
5.65. That's the 0 points, right? And
Yeah.
that's fixed for the first 5 years. And then we qualify at that start rate. So that's a really good program.
Yeah. Oh, wonderful. And I know you track mortgage applications, rate locks as sort of a look into the future of what's going to happen. Any movement there? Have you seen anything over the last month?
So we're in the summer. So typically the summer is a little bit slower. People are on vacation doing different things. But I would say in the last, we can kind of feel a little bit of an uptick in applications and locks in the last 2 to 3 weeks. Which is a good sign.
Okay. And then your take on rate cuts for
Mhm.
September. What's your golden
And
lock?
last
What do you
time
think?
I was saying it, and I know Paul and I were kind of talking about this. I feel it's going to be a rate cut. This is my personal opinion, of course. There'll be a drop of 0.25 or a quarter point in September.
Sure. Okay. I'm gonna stick to my prediction, which I'm not
Mhm.
happy about. I think rates are going to end up going up a little further.
Really? That's your prediction? Are you just trying to be counterculture?
You guys have been wrong for so long.
Oh
I'll just
God, I
take the other
know.
side.
Come on, I
Yeah,
told
but
you. Yeah.
fingers crossed for sure that we do see the rates come down. So, Anders, anything else you want to add today?
No, I think that's good. I appreciate it.
Okay.
Thanks. Thanks again.
Thank you
Thanks for
very
all the
much
content.
for coming in. Really appreciate you giving the on the ground up to date what's happening with the interest rates, both here and then also when we call throughout the week. Okay, so stand by. We'll be right back with economist Paul Brubaker. We're going to look at the real estate market and what is happening there. Be right back. And we're back with Hawaii economist Paul Brubaker. Paul, what did you think about Anders' comments regarding interest rates and the potential for the interest rate decrease in September?
Yeah, I mean, true confessions, we're kind of saying the same thing we've been saying for a year. Yeah, interest rates are going to come down, but what can I say? I actually think they're going to happen based on what the Fed chair said in today's expression of a kind of a shifting pattern of risks in the national economy. And as a consequence, to make this point a little tighter, a year ago, when rates were down closer to 6% than where we are now at above 6.5, right? A year ago, we were all thinking, yep, rates will continue to come down in 2025. And of course, they didn't. And here we are looking at next month's Fed meeting, hoping that the Fed chair is signaling correctly that rates will come down. Here, if you invert that mortgage rate, right? If you turn the mortgage rate upside down, so 3 is up here, and 7 or 6.5 is down here. The higher mortgage rate, lower in this chart, the higher mortgage rate is associated with lower home sales. And we'll look at the housing market stats in a while. But you can see my point about with the rate stuck here for 3 years. I mean, wandering around between 6 and 7% for the last 2 or 3 years. We're all tired of waiting, and we figure we ought to get back into the fives in the next year.
Yeah,
In which
this is
case,
one of
we
my
could
favorite
expect.
charts, by the way. I really like
It's
this chart
amazing
because it
how
really
tight a
shows.
fit. It's
Yeah,
amazing how tight a fit is. By the way, it isn't always historically because there are other things, happening like COVID. You can see what COVID did to sales. But yeah, I think we've got a better chance. I'm just a little, self-aware of I've been saying this for a year without it happening. So,
yeah,
like, why are people
yeah.
still listening to that guy?
Well, you're right about everything else.
Because
Okay,
ChatGPT told me to.
that's right. Okay. Well, let's look at the housing stats and let's jump over to Oahu and take a look at the inventory statistics. This is an interesting one. So we're going to start with active listings for sale. And this is the month of July, which is the latest information from the Honolulu Board of Realtors. You can see the numbers now compared to 2024. Single family homes there's an increase of 20% of available inventory. Condo market up 32%. And this is where it gets really interesting. If we go back to 2023, 44% more homes on the market right now than what we saw in 2023, and over 100% double the amount of condominiums. Paul, let's start with the single family home increase. What do you think is causing this?
Like I say, that persistent high mortgage rate is just, beating the crap out of buyers. They're just like, I'm out. And so the people wanting to sell, and things happen in your life and you have to sell for one reason or another, get a new job, a change in your marriage or whatever. There's always a certain amount of turnover that has to be accommodated. And when the interest rate environment or the mortgage interest rate environment is not supportive, you're having to, if you have to sell, you're kind of doing that into this headwind of a high mortgage rate that's keeping the buyers at bay.
Yeah. And I'd say anecdotally, there's also a delta between what sellers are expecting based on all the appreciation everybody was seeing and what buyers are willing to pay right now, and causing a little bit of inventory. And then just to go back and take a look at 2019, now compared to 2019 pre-pandemic, we're down 50% in single family homes. But condos, interestingly enough, it's the same amount of condos that were for sale in 2019, being up 1%. Do you see anything interesting here?
Well, the main thing that's interesting, you remember the inventories were high because sales volumes were high. So the turnover was lots of homes for sale, lots of homes being bought. Now what you see is uh, homes for sale without the absorption, and particularly, well, in the condo space, something bad has been happening for several years. I mean, something's been weighing on the condo segment, structural factors that are
Yes.
specific to condos, like the insurance costs, which may be closer to a resolution now than over the last couple of years. But for problems that were specific to condos, the clamp down on vacation rentals and so on,
Yeah.
that maybe are closer to resolution.
Right. And the reopening of the Hawaii Insurance Relief Fund has provided some relief to the condos that were struggling with the insurance issues. And in just a couple of weeks, we're going to do a Zoom with Sue Savio, who's kind of the
Yeah,
guru of insurance in the state.
yeah,
And she's got some really good news. It seems like there is relief right now that's happening
sure.
with some of those rates. Okay, Paul, why don't we jump over? Let's take. Yeah,
Unless there's a hurricane,
that's
in
true.
which case we just spent the money.
That's exactly right. And
Yeah,
and as we all know, we're interconnected. If
yeah.
there's a hurricane that hits Florida or New Jersey, it's going to affect everybody,
Oh,
across the
bro,
planet.
it's Murphy's Law. The minute you spend all the money in the unemployment insurance fund is the minute the unemployment rate's going to go up. I'm just telling you,
Right.
the minute you drain the hurricane relief fund is when Garance Bombarance is going to be a hurricane. So we should. I mean, I understand we needed to respond to a situation in the market that was, about to go off a cliff. But
Yeah.
we also need, next step, replenish the fund ASAP, and we got to be
Yes.
starting that conversation as well.
Yes. And one thing I really like about Sue Savio, she works with so many homeowners organizations. She's sounding the alarm for maintenance. No more deferred
Yeah,
maintenance in these buildings, or you cannot get insurance, or you're going to secondary and
at
third tier
all.
markets. Yeah, it's a good thing for Hawaii's inventory,
Yeah.
condo inventory stock. All right, Paul, let's jump over and take a look at sales volumes, and then we're going to wrap it all up with the pricing and look at the months of remaining inventories. Hi, it's Patrick. If you're enjoying this content, please do give us a thumbs up below and be sure to subscribe. Thank you. And this is the
There.
closed sale data from the Honolulu Board of Realtors for July, the latest report that just came out. And we can see here closed sales for single family homes down 3%, a little not too significant compared to last year. Condos down 5%. Single family homes it's actually up from July 2023. Condos are down 11%. And I just like to go back to this benchmark of pre-pandemic 2019. Closed sales are only down 24% for single family homes and only down 21% for condos. The end of 2019, certainly we're starting to see some market correction, but I think it's interesting in the context of there's still a lot of home sales and a lot of condo sales taking place compared to 2019. Does anything stick out to you here, Paul?
Well, only that the condos have slipped a little further, right? Single family homes kind of in the same zone, 1600 plus or minus, down 20 to 25%. But the condos you see both the last couple of years leading into this have come down from something probably closer to 3,000 to 2,000 a month to 2,500.
Okay. And Paul, let's jump into months of remaining inventory. And just to remind everybody, market equilibrium, we talk sometimes is about 4.5 to 5 months of remaining inventory. Anything above that number, a buyer's market, anything below that being a seller's market. And this is really interesting to me. And I know you've got a great chart we're going to look at in a moment. Go back to 2019, 3.7 for homes, 3.9 for condos, tracking together, both more in I'd say a seller's market at that point. July, the big boom happens, right? So now we're at 1.3 for single family homes, 2 for condos, clearly a seller's market at that point. 2024, start to see a little separation. Single family homes, 3.2, condos at 5.1, now flirting with market equilibrium. And then here we are today, huge separation. Single family homes at 3.7, in the range of a seller's market still. 6.8 for condos, clearly a buyer's market. What do you think about all that, Paul?
Yeah, I think your rule of thumb, I would guess that if if Honolulu were, Honolulu tends to be a tighter market because the supply side is so tight, it's really hard to build. So the 4 rule of thumb might be 3.5 to 4. The 3.7 and 3.9 to which you referred in 2019 reminds me of kind of a balanced situation. Here, more recently, we have the separation that your data point out, and you can really see it. There's that 4% number. So we were kind of, the market seemed pretty balanced to me, tight but balanced. So that was a 3, right, in the late 20 teens. So on the seller side of balance, so to speak. But here, even though single family have just moved back into a more balanced zone, and the inventories have been building on the single family side, that condo break is really, really noticeable. It's really a tale of 2 different market segments where certain things are happening in one and not the other. A bunch of things are happening for condos that simply aren't a problem for single family, even though single family inventories are starting to accumulate.
Yeah. That last chart you showed, what strikes me is how tight the condo and sales months remaining inventory is for such a long time until this recent cycle.
It goes back to the 1990s. I mean, those things moved together for 1987. We have 30 years of data, 20 years of data, 30, no, 20. We have 20, 25 years of data where they move together tightly. And then just before the pandemic, they started to break apart, originally because of the vacation rental regulatory controversies. But then on top of that, the maintenance and insurance costs most recently that have been a huge problem for the condos. And if you think about it for a second, if you are concerned about climate change and the impact on frequency and intensity of tropical cyclones and whatnot, this could be a problem for single family homes too. And certainly in particular areas, more oceanfront located housing markets. We all ought to be thinking about this stuff.
Yeah. No doubt. Oceanfront homes suffering right
Flooding,
now. Very difficult on the insurance market. And just recently, one of the big carriers said we are no longer going to write single wall construction homes on the island of Oahu. That's a huge part of the stock. Now, there's some caveats to that.
I live in one.
Yeah. A lot of people do. There's a lot of things that can be done. But the sort of this sickness that plagued the condo market and insurance is now sneaking and seeping into the single family, and people are getting some really surprising insurance premium increases. And the oceanfront guys, it's really a tough one right now.
Sure. Right.
Yeah. Okay. Well, Paul, let's take a quick break. We come back. Let's look at pricing, and we're going to get Paul Brewbaker's projections for the future. So stand by. We'll be right back with economist Paul Brewbaker. Okay, and we're back with Hawaii economist Paul Brewbaker. And Paul, we're going to jump into pricing right now. So let me pull up the statistics from the Honolulu Board of Realtors. This is for the island of Oahu. And we're going to look at year-to-date median price. We can see compared to 2024, single-family homes up 4.5%, condos down 2%, kind of keeping the same thing that's been happening there. Compared to 2023, median price for single-family home is up 9.5%, condo flat. Paul, it kind of seems like we took that jump and we thought there might be a new trend line for single-family homes, but suddenly we're sort of reverting back in some ways.
Yeah, in kind of a quick, in a very fast, can I jump in and replace your slide?
Sure.
This reversion to trend that's showing up in those data you just showed up this summer. Like June and July, single family homes medians dropped right back to the 20 teens trend. And as you mentioned a second ago, we had been running parallel to trend in the detached dwelling segment for about 2 or 3 years. It was interesting that we had the overshoot after the pandemic as kind of a remote work response to increased demand for suburban and exurban single family detached dwelling. But then things had settled down to what I thought could have been a permanent premium. And I don't know, is 2 years or 3 years permanent? I guess not. But it's not temporary either. It was really there until last month. And if you, single family homes, of course, have been drifting away from trend, but only because they've been stable for the same 2 or 3 year period, that single family homes were moving in parallel to the 20 teens trend. Now that single family homes have returned to trend, the detrended, right? In the 20 teens, they're both on trend. So the deviation from trend is zero. Then comes the pandemic, then comes the slowdown in 2019. The pandemic shakes everything up. Single families bolt above trend, a couple standard deviations, more than one, and then settle into this zone above trend for a solid 2 years before just in June and July, right? There's June and there's July.
Right back to
Boom,
the
mic
right
drop.
back to zero. And then look at the
Right back to the
condo
trend.
market. Just
Well,
shows it
condos have been
again, this
fading.
deviation, right?
Just kind of remember, condos are just going sideways, but you don't invest in housing to go sideways. You invest
Right.
for the appreciation. So the question is, when do we go back to the appreciation for condos and for single family homes? Do we punch through and go to the downside? Now layer in the possibility, I would say a higher probability than a month or two ago, of renewed movement towards lower mortgage interest rates. Will that hold up these segments? Will the comparative affordability of condos have been going sideways when single family homes were going through whatever they're going through? Will the resolution of the condo challenges from an insurance standpoint, the increased recognition among owners associations that the maintenance issues are serious and have to be addressed, will that rehabilitate the condos and people realize, wow, condos are kind of a bargain in the urban core of Honolulu, and my boss just has returned to office. So, bunch of things, bunch of moving parts combined with whatever's
Yeah.
happening in the national economy and interest rates to maybe pique people's interest, not to mention the crash crash test dummy of vacation rental regulation. I mean, what the hell is going on with that thing?
Yeah,
So
that's
again,
devastated there. Yeah.
an interesting market to be
So,
looking at.
Paul, when we're looking at that price trend line that you had up just a few moments ago with the single family home and the condo, the I think that chart goes back to, is it about a 10-year span?
Yeah, this actual
2012.
trend
Hmm.
is I don't have it. Yeah, I have it in the bottom. I run a regression from 2010 through 2018, the middle of each year. You can
And
see in
that
mid
single
2018.
Yeah, and the
Yeah,
single
yeah.
family long-term trend is about 4%, and then the long-term trend on the condo historically has been about 5% per annum. Is that correct?
I'm not going to say long-term trend, but the 20 teens trend for sure, 4 or 5%. It turns out the long-term trend, if you do the math, after inflation, if you take the inflation out, is about 2 or 2.5%. If you put the inflation back in, what's the long-term inflation? Probably 2 to 2.5%, right?
Yeah.
So 2 plus 2 is 4. 2.5 plus 2.5 is 5. And we were kind of in the zone when you look at the long term for all housing valuations on Oahu, taking out the inflation. We've just sort of gone through a tiny, it's not really a bubble, a tiny post-pandemic adjustment of sorts. And I would say, providing that Hawaii's economy doesn't fall off a cliff in the remainder of the decade, I can't rule it out, unfortunately, but I would say getting back on trend is the most
Mm-hmm.
likely outcome, uh, even though there may be some overshooting and undershooting along the way
Okay.
as we
Well,
sort out all of these factors.
let's go to the lightning round, and I'm just going to ask your predictions on
Yeah.
these. So, 12 months from today, single family homes on a percentage, where will values be?
Relative to today,
Yeah, 12
uh,
months from now,
or or
up
the actual numbers. I
up
mean,
4%, 4.5%.
yeah, I would still say up, 4%, not 5%. But you could see a 1.2 million single family home price and a, 550, 575. I mean, not maybe not quite 600 for the condos yet. Isn't the median 550 or something like that?
A little less. And then what about
A little less,
condos on
yeah.
a percentage 12 months out from today? Do you see it remaining flat? Do you see a little increase, continue
Well,
to
as
trend
I
downward?
suggested, I'm encouraged by the resolution of some of the condo insurance uncertainties. I'm encouraged by the fact that there seems to be a recognition of the maintenance issues and maybe some remediation. And there's going to be some resolution of uncertainties about tariffs, their impact on the economy, the extent of inflation, risk that they pose, and with any luck, some resolution of these wacky vacation rental rules of the game. So once all of that dust settles, condos are kind of going to look attractive relative to single family homes for a lot of buyers who obviously can't make the reach, but who might have been holding back on the condo segment because of these other problems.
Yes. Okay, that makes sense. And then let's just say 12 months from today, where do you think we'll be sitting with the 30-year fixed? If we're calling it right now, let's just say 6.6. Where do you think we'll be out
Yeah,
12 months from now?
I'm going to say six, the figure 6.0 plus or minus. Um, I think we ought to be heading towards the high fives during the remainder of this year and the course of next year. So, of course, that's what I was saying a year ago. So everything's been kind of delayed by a year, change of presidential administration, wacky people running everything from national security to, you know, public health. So, yes, there's still a lot of crazy stuff that we have to digest. But
Yeah.
I'm feeling like the housing market and the interest rate environment could get back on the path from which they were dislodged a year ago, 6 months ago.
Yes. Yep. That would be good news, and would love to see rates get into the fives on the 30-year fix. We keep talking about sort of the magic number at 5.5. We'll start to see some movement again with a lot of people who are locked in with those low interest rates.
I'm
Um,
thinking a six handle is a safer bet, but a low six would be a safe, planning sort of parameter. But
yes.
man, a five handle would be like magic in this
Yeah,
housing
it
market.
really would. It
Yeah,
really
we're
would.
not going back to 3 or 4. I
Don't
think
think
people
so.
have come to understand that. So anything with the five handle would be much closer to a long-term equilibrium that we ought to be thinking about when we're thinking about a long-term investment like an investment in a house.
Yes. Yeah. Well, Paul, thank you very, very much for making the time to be here today. And for those of you who are watching, if you've enjoyed this, please give us a thumbs up down below and be sure to subscribe so you don't miss next month's Hawaii Housing Report. So until next time, be Be well, be kind, and aloha.
Mahalo.